Welcome to this video. Based on the technical analysis and Dow theory, what it says is if the stock is going up, are more likely to keep on going up because it will keep on forming the higher highs and higher lows. On the flip side, if the stock is going down, are more likely to keep on go down. Why? Because it will keep on forming the lower highs and lower lows. And because of those formation of higher high and higher lows, it is very important to understand the current trend of the market, because the current trend of the market is the one which will decide whether you should buy that particular stock, sell the particular stock, or you want to hold that particular stock. Sometimes determining the trend is very difficult job in case the stock price movements are in haphazard manner. That is the reason why this video is also very important, because this video will clear a lot of doubts about your trend analysis and how to use moving average with full benefits. In my early days, I came across many indicators, and one of the indicator was moving average. I tried for a few days, and then guess what? I lost a lot of money. Then for a few years, my thinking was moving average is lagging, it is waste, and it is of no use at all. That was the conclusion which I had for a few years. Then when I got matured as a trader, when I look back and found that, hey, moving average is not as useless as I thought of. Before starting, let's think about a car race. Now the car race is between Ferrari 812 and Toyota Innova. We can assume that Ferrari 812 will beat Toyota Innova in any given day because of some of those very important things, something like stronger horsepower, then stronger cc, then bigger engines and stuff like that. Based on that, are we concluding that Toyota Innova is useless car? Well, no, because it depends upon the angle where we are looking at. Toyota Innova can fetch a family of 7 to 8 members easily, sometimes 9 to 10 also if you are in India. But Ferrari 812 will not be able to do that. Toyota Innova will save a lot of money. It will consume less fuels as compared to Ferrari 812. So, we are concluding that Toyota Innova cars are not useless. It is based on the angle which we are looking at. If you go for saving money and fetching more people, then Toyota Innova car will be the preferred choice, right? So, similar to that, the way how the moving average works, if we understand, it is one of the simple and one of the best indicator to work with. Similarly, moving average can be one of the preferred choice if you have control over it. Let's deep dive and understand how this moving average works. Moving average is a tool or indicator which will track the price of stock over a period of time and plot all of those on your chart. This essentially will smooth out all the price fluctuation and gives us the general idea where the stock is heading. Moving average is a demand forecasting method, and it is also called a lagging indicator. Now, why we call this is a lagging indicator, we will be discussing in depth while going through in this particular video itself the usage of moving average. These are the three primary usage of moving average. Number one is to get the relative strength of a stock. And to buy the stronger and short the weaker. This can be a very good tool to use. Number two is to find the sweet spot when you can take the entry on that particular stock. And the last one is to trial the stop loss for longer period of time. So these are the three very important uses which we will be elaborating in this particular video. But before starting, if you're watching my video for the first time or 100th time, hit the thumbs up button and subscribe to our channel, because if you will hit the thumbs up and subscribe to the channel, then only you will always be up to the date. Let's talk about how moving average works. Let me explain how moving average works with very simple manner. Think that we are having one of the stock which is called ABC, and the stock price is moving in this way: 1, 2, 3, 4 and 5. Now, if you want to calculate the moving average of those that stock called ABC, and if we take the duration as 5, that means we want to calculate the moving average of 5 previous candles. In that case, the calculation will be very simple. What we'll be doing? 1 plus 2 plus 3 plus 4 plus 5. So automatically we got the number called 15, and because we are calculating the moving average of 5 period, so we got the answer as 3. So So basically, what is the moving average? If I am having the price movement or the closing of the stock prices are 1, 2, 3, 4, 5, the number will be 3. The price was 1, 2, 3, 4, 5, and the next day the price became 6. So in this case, if you want to calculate the moving average of 5, please try to understand, because of the very simple reason, as we are considering the 5 candles, that is the reason why in that case what we have to do, we just need to ignore the first one. Why? Because as we want to consider only the moving average of 5 period, that is the reason why we will be considering the latest 5 prices or the closing price of the stock. So based on that, what would be our moving average? So the moving average will become 4 for this particular period. So I hope you understand that there are many types of moving average, but the calculation which we are looking into it is simple moving average. However, the other types will also be behaving exactly the way how we are talking about. There will be slight difference in the way how it works. Now, the first one, the number one which you talked about, we can use moving average to identify the relative strength of the stock. This is the concept by which we will be able to identify the strongest stock in the market to trade. As you already know that whenever you want to buy a stock, you must buy the strong, and if you want to sell the stock, in that case we should go for the weaker stocks, because the weaker stocks are weak because of some reason, right? So that is the reason why whenever we want to buy the stock, we always buy the strong, and whenever we want to sell or short the stock, we usually go for the weaker ones. So let's try to understand like how this relative strength can be very, very useful for us to understand. Moving average is one of the good way to get the strength of that particular stock. That's why we usually use this particular mechanism to get the relative strength of the stock. Let's think that you are having two options. Number one is one of the stock called Divi's Lab, and another is called Granules. Now, your technical analysis is telling that both of those stocks are looking good, but you want to buy that particular stock. In that case, you should always buy the stronger among those two stocks. So in that case, what you can do is you can open the chart of the stock. Maybe I will open the chart of Granules. So if you see here, Granules is the stock for which the moving average is below the current price of the stock. That means the stock is very strong. Now if I have two choice, one to buy Divi's Lab and another to buy Granules, and both of those are looking perfect, in that case I will be buying Granules. Why? Because of the very simple reason, if I look into the stock called Divi's Lab, I can see that the current price is below the moving average of that particular stock. So similar to that, whenever you are having some sort of confusion whether to buy any of the stock, you want to take a decision whether to go ahead with any of the stock. In that case, this particular technique will be very, very helpful. Let's talk about the similar way. If I am considering two very, very important and very, very good stock in FMG sector. One is called Britannia and Hindustan Unilever. So if I open the chart of Britannia, what happens? The stock price is just touching the moving average. However, when I open the chart of Hindustan Unilever, what I see is it is above the moving average. So if your choice is to buy the stronger one, you must buy Hindustan Unilever as compared to Britannia, right? Because of the very simple reason, if the stock price is more above the moving average, that means this is a sign of strength. We can trade the stronger one for upside and avoid the weaker ones. Okay, there might be some cases when both of the stocks are having moving average below the stock price. So something like, if we'll go for HDFC Bank, and if you see here, the HDFC Bank price is above the moving average. Similar to that, ICICI Bank. So if I open both the charts, what happens? The ICICI Bank is also having the moving average below the price. So in that case, what we can see is the how much depth it is making. So if you see here, ICICI Bank is very much above the moving average as compared to the HDFC Bank. What does that mean? We should prefer ICICI Bank because it is more further from the moving average than HDFC Bank. This is the way how to use the relative strength to find out which one is better in case of choice in case like we are having problem of plenty. Okay, now the second thing which I talked about is to find the sweet spot. Suppose we are given two scenarios. Okay, the first scenario is we are playing a 20-20 match and we need 100 runs to win in 60 balls, and we are having two players with us in pavilion. One is Cheteshwar Pujara and Hardik Pandya. Obviously, you would go for Hardik Pandya, right? Because his strike rate is better than Cheteshwar Pujara. Now, the second scenario is in a test match, we need to bat for the whole day to draw the test match. And you are having two choices, the same choice, Cheteshwar Pujara and Hardik Pandya. Whom you will prefer? You will obviously prefer for Cheteshwar Pujara. So, here are the things. As a different player will respect different sort of situation. So similarly in stock market also, different stocks respect different sort of moving average. Let's talk about one of the stock called Coromandel. If you try to understand what is happening, the Coromandel is keep on respecting the 50 moving average and keep on moving up. Now, if I open and show you the other moving average, so clearly when we open the moving average of 20, 50, 100 and 200, this particular stock which I am talking about, Coromandel, is respecting more of the blue line, which is the 50 moving average. This is the way how we have to find out, because as I told, the way how the different stock move. So here is the thing, right? Different players respect the different sort of situation. Similarly, different stocks are having their own pace of moving with moving average. And Cheteshwar Pujara will be respecting more of playing the test match and playing out the whole day, wherein the Hardik Pandya will be more into the hitting sort of batsman who will be giving us the more strike rate, and we will be able to win the match if he will be playing with his potential as to get the good strike rate. So similar to that, here is the thing, as different players respect the different sort of situation, similarly different sort of stocks also respect different sort of moving average. So how to find out the sweet spot? You just need to draw the moving average of different time frames, and you just need to find out which is the moving average is perfectly fit, and this particular concept is called dynamic moving average. So if you look into this stock which I am showing here in front of you, what you have to do, if I open the moving average 50, it is clearly respecting. If you see here from this particular point itself, the first time it is respected, then second time it is respected, and it keep on moving up from here till this particular point. And always whenever the stock comes down to this 50 moving average, and we are seeing some sort of upside in this particular stock. So similarly, what we have to do, we have to figure out and find which is the moving average is best suited for a particular stock, like whether to prefer the moving average or price action. Price action is always comes first, and we must prefer the price action. So whenever you are having doubt and to choose between the moving average and price action should be preferred first. Why? Because as I told, moving average is always lagging indicator, right? The third and very important point which you talked about is you can use moving average to trial your stop loss for longer period of time. It is something like, if you notice the blue line here, right? So market closes and breaks the line here. So it is something like the stock is coming here, again it is going up, coming here and going up, right? So it is trying to respect this particular line. So similar to that, let's try to look into some of the stocks and figure out like how it will work. If you see here, if you could have trialed the stop loss based on the moving average, can you see such a big movement you could have caught, right? Or the stock called Mindtree. When we will look into this stock, what happens, you could have hold this particular stock for such a big trend, right? Now how you will be able to hold that particular stock for such a long period of time? You can use the moving average to use the trailing of the stop loss, and whenever there is some sort of buffer we can put, I'll be talking about the buffer in different video altogether. But please try to understand, if you are able to move this particular stock from this particular point to this point, which is a big move, and you are able to ride the trend only because of the trailing stop loss. Similar to that, if you go to some other stocks, maybe if I open the chart of Tata Power, right? So this is also one of the best way to ride the trend. you could have easily, ridden the trend for such a long period of time. Now this is the thing here, right? If you go for 20, you will be getting the exit little faster. It is completely depending upon the risk management and time horizon you want to hold the position. There is no best approach as such, 20 is better than 50 or 50 is better than 100. There is nothing like that. It depends upon what type of trend you want to capture and how much drawdown you can bear. There are, rough guidelines. Based on the rough guidelines, what we can do, we can think that if you are holding any of the stock for short period of time, then 20 moving average is the best suited for that. If you are holding any of the stock for medium time frame, in that case 50 to 100 moving average is more suited for it. And if you are holding the stock for 200 moving average, then the long term is the one which we have to go for. So the short term moving average are the one where the drawdown will be less. So it is something like if I go here in the chart and change the time frame to 20, so what will happen? Your drawdown will be less. It is something like if you are entering here, you are exiting here, then what happens? The drawdown will be less, but the checking out from the stock will be faster. Wherein if you will go for the longer time frame, something like 200 moving average, if you go for 200 moving average, what will happen? The drawdown will be a little bit more as compared to the 20 moving average, but you will be able to go for the deep trend. Okay, so it is something like the drawdown is huge. If you see here, drawdown is huge because it has gone till this particular top and you are exiting here. So that is the difference between the 20 and 200 moving average or 50 or 100 moving average, and this is the way how you trial the stop loss. Now let's talk about some of those drawbacks of moving average. For wrapping it up, let's talk about the drawbacks of moving average. So the number one drawbacks is whipsaw. It is a situation when moving average will keep on going up down from the price. This happens mostly when we choose the smaller time frame. So if you will change the time frame to 5, then what will happen? The whipsaw will be more and you might not be able to ride the trend for longer period of time. And the number 2 is, as we already discussed, that the moving average is a lagging indicator. So it is very slow to reflect. What does slow to reflect means? This is one of the drawback where we are giving the equal weight to each time frame. So it is more prone to be slow even if one day will show the reverse direction. That's where the weighted moving average and exponential moving average will come into picture. So they will be giving some more weightage to the recent prices as compared to all the old prices which you're having, and they react quickly to the stock price changes. These are very, very helpful for the active traders. We'll be discussing about the weighted and exponential moving average in different video. In that video, we will be talking about how we can tweak EMA and weighted moving average to make it easier to use and make it little bit leading indicator as compared to the simple moving average. With said that, let's recap what all things we have learned in this particular video. So we have covered moving average, where we talked about moving average is nothing but it is a demand forecasting method. It is a lagging indicator, and these are the uses of moving average. Number 1 is relative strength. So we can compare the moving average price of different stocks and figure out which is the stock is stronger and which are weaker. So if you're having problem of plenty where you want to choose one stock among many stocks, you can use this particular method to find out which is the stock is relatively stronger or weaker. The number 2, as we have talked about, is called to find the sweet spot. So it is something like, like if you want to find the exact place from where you should get into that particular stock, it is something like, there are many moving average, 20, 50, 100, 200. Now, which is the moving average is perfectly suited for the stock? You have to draw those moving average and see which moving average is getting respected by which stock. So it is something like if Tata Motors moving average is more suited for 20, it doesn't mean that other stock will also be respecting 20 moving average. So it is completely depending upon the stock. Different stock will respect the different time frame of moving average. And the last one, as you told, if you want to trail the stop loss for longer period of time, you can utilize this moving average so as to ride the trend for longer period of time and get some really good amount of money in your trading account. Thank you for watching this video. Happy investment, happy trading, happy learning.